Morning, everyone, and thank you very much for joining me. This is the DAX Open. My name is Russell Shaw, Senior Market Specialist at FXCM, and my email address is rshaw@fxcm.com. And if you need to contact me, please send an email to that address, and I'll respond as soon as I'm able. Today is Wednesday. It's the 15th of December, 2021. I'm just going to bring up our disclaimers. So here's the high-risk investment warning. And then we'll bring up the commentaries disclaimer. And then we'll bring up our references, which will effectively be, we'll take a look at the headlines according to the CNBC morning note, and then we'll do the analysis. So here's our market commentaries disclaimer. I'll just keep this on screen for a few moments. Okay, and our references, MarketScope and CNBC. So let's go to CNBC. And the headline, European markets head for choppy open as investors focus on the Fed decision. So the Fed announcement is going to be at 7 p.m. GMT. So, that's, when I say the announcement, that's going to be the release of its statement of the interest rate changes, which there won't be any, but we'll see the statement. So that's at 7 p.m. GMT, which is 8 p.m. UK, 9 p.m. ZA. And then half hour after that, we'll get the press conference by the Fed chair. So that's something just to keep in sort of the back of your mind, because it's a key focus. And then actually tomorrow we've got ECB and BOE, and Bank of Japan fits in there, but that would be, in my opinion, less volatile than the others. All right, so European stocks are expected to open flat to higher today. Investors are turning towards the Fed's latest monetary policy decision. Investors are focused on the Fed. Here we go, Bank of Japan, Bank of England, and ECB. And these are all due to announce their policy decisions. The Fed's two-day policy meeting will, where policymakers are expected to discuss the speeding up of the bond buying program, concludes today. Central Bank will release a statement with the quarterly projections for the economy, inflation and interest rates. Jerome Powell also hold a press conference. Of importance is there will be the dot plots. So we also wanted to see, and what are the dot plots? It is the forecasts of the FOMC members, where they see interest rates sort of in the next, in the short term, medium term, and long term. But the dots themselves don't have any name, so you don't know whose forecast is whose. But as a whole, it gives us a great deal of information. Investors will be watching closely for commentary around whether the Fed plans to accelerate the bond buying program, which is most likely. I mean, that's what's been communicated. At present, the central bank asset purchase program will end in June 22, but several officials have spoken about ending the purchase sooner. If we don't get that, so if we don't get a speed up in the asset purchases, I think that would cause a huge amount of volatility initially. So if you're having a position over the announcement, that's a real risk there. The latest CNBC Fed CNBC Fed survey showed that investment professionals and economists expect the Fed to wind down its asset purchases by March and begin rate hikes in June. US stock futures were steady in overnight trading. In the Asia Pacific market, mainland and Chinese markets traded muted on Wednesday as investors digested key Chinese economic data that included industrial output, which was up 3.8% year on year, more than the 3.5% increase in October, and better than the 3.6% expected in the Reuters poll. Data also showed that retail sales in November rose 3.9% year on year, which was less than October's 4.9% increase and below expectations of 4.6%. Just in terms of the data coming out of China, by the way, it's weakening notably. And the reason why we bring that up is because China has been a huge engine of growth, certainly since the tech wreck, and certainly after the global financial crisis. The fact that the economic series are declining so rapidly is a real cause for concern, because it can act as a drag on global growth. So that is something that we need to just keep an eye on. Investor sentiment is set to remain cautious after the World Health Organization warned the new COVID Omicron variant is spreading faster than any previous strain, saying that the variant is probably present in most countries of the world. I think we all knew that was coming. The spread is clearly, it's, I mean, I can't remember the exact figures, but it's, did I read 4 times more contagious? That sounds a bit odd to me. Nevertheless, we know it's a lot more contagious, but the symptoms seem to be more muted. Okay, earnings from Interdex and H&M today. Data release include inflation data for the UK, France, Spain, and Italy for November, and Greek unemployment data for October. All right, so let's take a look and see what's happening in the markets. And very tough markets this week. I'm finding them very tough. Let's see what the price action can give us, see if there's any clues there. Let's go through to this chart here. It's just, I think, easier to analyze. So let's take this out for the time being and just concentrate on the last 3 candles, 1, 2, 3. The last 4, 1, 2, 3, 4. Okay, and I think that the emphasis should be on the last active reference candle, which is this candle here. And just to reiterate what a reference candle is, let's just draw it here. So I think everybody knows the conditions. So condition 1 is the lowest low in at least 3 candles. Well, that this point here meets that criteria. Condition 2 is price taking out that reference candle's high, which is met on this candle, and then the close being above the reference candle's high, which again is met on this candle. So that's the last active swing point, and it's a swing low. Now the swings in of themselves guarantee nothing. Okay, so we can't make any forecast with any certainty. That's folly. But what we can say is that the swings, any swing, must be preceded by these 3 conditions. So the 3 conditions don't guarantee a swing, but a swing must have those 3 conditions. So the fact that we've got these 3 conditions gives us the possibility of a swing. Okay, but of course it doesn't guarantee that. In fact, what was suggested yesterday by Peter is, well, this is a huge sell-off here. You know, isn't this an influence? And I think that that is a distinct possibility. So let's just look at it in terms of a contra. So let me just take these out. And the contra, in my opinion, would work out something like this. at the moment, the possible contra-reference candle is this over here. Why is this the possible contra-reference candle? Because that's the highest high in at least 3 candles. So let me show you what that is over here. Okay, so it's the opposite of the other, where we've got a candle that's a reference candle because it's got the highest high in at least 3 candles. Well, that's this guy here, right? But we must be careful because this candle is not complete. In other words, let's just say over the next 3 trading sessions, there's a huge shoot up and it takes out last week's high. Then this becomes the potential reference candle. Okay, so for the time being, we'll just say, look, this is the reference here. It does introduce a difficulty. I'll explain that in a moment, because if this is the reference, then this would be the measurements for condition 2 and 3. In other words, we would still need price to take out this candle's low and close below this candle's low. Now, if it does that, by the way, I think that would be a huge knock on market sentiment. I think markets then would be reeling going into 2022. So that's just one of the scenarios we need to be cognizant of. So keep an eye on that. But, okay, so there is this bearish case to be made, but the active reference is actually to the bullish side. So that's what we'll work with in the meantime, subject to correction. If we need to correct it, we'll have to correct it. And let's take this out. Okay, so with this, with the three conditions met here, well, this week's been a very, again, as a very hard week in my opinion. There's no follow through from last week's bullish action. In fact, I think we can say that there's a fair amount of resistance here, because that's where last week's candle was pushed back, and that's where this week's candle has been pushed back. So there seems to be a fair amount of selling just here. So if there is going to be any progress based on this swing low, it has to overcome the sellers, whoever they may be at this point. All right, let's take a look at the daily chart. And the difficulty in the price action, I think, is actually being exacerbated by the daily chart. And the reason I say that is because we are in the middle of zone 2. Zone 2 is adirectional. It's adirectional. Well, that's the assumption based on these zones, right? Zone 1 is your zone of strength. Zone 3 is your zone of weakness. Zone 2 is in between. Okay, so it's neutral. Price, if it goes down into zone 3, there's the weakness. If it goes up into zone 1, there's the strength. However, where I think it does help is when there are crosses from the outer zones. So we had a cross from zone 3 into zone 2. Well, that's clearly a positive step forward. We're going out of the weak area, okay, into a more neutral type of position. Well, out of weakness must be seen as bullish. So that, I think, is the positivity, okay, which is represented by the swing low, the 3 conditions here. But if it just meanders in zone 2, well, then there's no trend to work with. We won't be able to trade with any sort of momentum. So that is the first point of, I think, of difficulty that we're dealing with. We're in this zone 2. Now, if we fall back into zone 3, well, that's meaningful as well. It means we've gone back into weakness. Another point where I think there has been some difficulty, these are Heiken ashes. I'm just going to take them off. All right, so where I think the difficulty is for the bullish case is here. So this was Friday's candle. Monday we had a terrific up move on Monday, but it was actually sold down. So the bulls pushed up. They were following through. They were following through. But then at the high of Monday, they subsequently lose control to the bears, and the bears actually savage the markets because we actually end way down near the low, way off the high. So the bears just absolutely come in and completely overpower the bulls at this stage over here. So my system's just hanging. The cash market's just opened. That's why. Won't be more. It won't be a sec. Okay. So that's what happened on Monday. And then now, according to the 3 conditions, see, so we want if we got that bullish condition, it would have been 1, 2, 2, 3, and then, well, perhaps a movement towards zone 1, which would be reinforcing our swing low off of the weekly. But the price action yesterday, let's take a look at this. Okay, this is not so comfortable now for the bulls, because now we've got a potential swing high. Here is the condition 1, and then condition 2, 3 comes through yesterday. So over the last 2 days, there has certainly been damage done on a technical basis in terms of bullish follow-through. So we want to watch that. The contra to that would be price closing above there, because that would be the reference candle. So if we get sort of a swing high here, we get a swing low here, well, then what we would say is, well, that's typical of zone 2. It looks like we're just meandering sideways. What's the downside to that? Well, it's much easier to trade a trend than it is to trade a consolidation. And if we're going to continue to churn in zone 2, that's going to make exceptionally difficult trading on the DAX. So we're in no man's land here. We've got a bullish, let's use this one. We've got a bullish reference candle. Okay, got a bullish reference candle with no primary trend to work with. So we're just working with swing points at the moment. We've got a neutral zone 2. We're not outright bearish, okay, but we're certainly not outright bullish. As Peter suggested, we can't ignore this, can we, just yet? It's still very much an influence. And that, of course, brings us to the hourly chart. And you can see that the hourly chart is lacking this volatility. See, there's the difficult. It's just churning sideways. Very difficult, isn't it? So we want to watch this now. Let's just point out the bullish and the bearish case here, because we're in the middle of zone 2, right? In the middle of neutrality. So the bullish case would be a positive cross of the exponential moving averages and the stochastic moving into the 80 level and holding. That would go a long way in correcting some of the bearish damage that's been done over the last 2 days. On the other hand, and unfortunately, because we're in neutral, we're going to have to see which is the stronger force here. But if we get a bearish cross down, and at the moment this is bearish, right? Green is below orange. Well, then if the stochastic makes its way through to the lower 20, well, that's potentially devastating. So angular and separation to the downside and stochastic falling into 20, there's your bearish case. Angular and separation to the upside and the stochastic making it into 80, there's your bullish case. Where are we right now? In neutral. We're at 50 with a very flat trend following indicator. What does that mean? It means trading DAX right now is difficult because we don't have any momentum to work with. Right, let me just see. And Peter says we need a center rally. And of course, just in terms of what a center rally is, there has been an observation. I did look at this a few days ago. I'm just trying to. I won't get the exact numbers correct. So, but you can do Google searches on Investopedia. So, the market over about 45 years, so about 36 out of 45 years, there's been what's called a center rally, which is generally the last week, I think, before the so it's generally the last week before New Year's and 2 days after New Year's, depending on market open times, right? So I think it's around about 36 out of the last 45, maybe 37 out of the last 45. There's been what's called these center rallies, but they're not guaranteed, of course. So again, please, the thing about these anomalies is that they make for good discussion. You can't guarantee them, but that is what the center rally is. It's also kind of like a seasonal anomaly. Like, why would that happen? You would think that if you expect a center rally, if you just think about it in terms of market participants, let's just say all of us on this webinar expect a center rally. So we go and we buy, let's just say the DAX index. We're all going to buy it, right? Because we expect a center rally. But it's not just us on this webinar. It's the market as a whole. We all want to buy. Well, who's going to be selling to us, kind of a thing. It effectively gets arbitraged out. Nevertheless, there does seem to be an end of the year anomaly. So keep an eye out for that. I want to sort of give the caveat that there's no guarantees, but it has been observed statistically. I guess there seems to be something there. The idea right now, for that to happen, Peter, we need to see the volatility increase, and that's our job now. So we kind of slap bang in the middle in terms of the stochastic. We want to get to that 80 and hold, and if we get to that 80 and hold, well, maybe that center rally is actually materializing, but we don't want to forecast it. So Peter asked, is it a liquidity problem? I'm not sure what, I don't think anybody's sure what causes it. There have been a few theses put forward. One of them is what's called window dressing. So there might be some sort of portfolio management activity just to end the year off, and they kind of use the last few days to do that for their portfolios. That's one explanation I've come across. Another explanation is that it could have something to do with taxes, that there's some sort of buying and selling in order to get some sort of tax advantage. Peter says, what about a Christmas bonus? I guess you could factor that in. And liquidity, of course, may also be the issue. So I think there are various types of explanations for it. But I can't give you a conclusive reason for it. So if you guys are interested, just Google Santarelli Investopedia, and you'll see all about it. Having said that, just bear in mind, without the liquidity, it's going to make our job difficult. We're stuck in the middle of zone 2 here. The bearish reference candle seems to be the dominant reference candle at the moment. So just be aware of that. There does look to be some sort of maybe support here. We'll just keep an eye on that. All right, are there any other questions? Let me know. All right, I think then let us conclude at this point. And thank you very much for joining this morning. As always, highly appreciated.